Now we're going to move on to the next speaker. Now, this man is the founder of Saving Plus, and he founded Ringgit Plus back in 2012, and it's grown. The business has grown from a lean two-man startup to Southeast Asia's first full-stack fintech solution provider for customer acquisition and management. In fact, just a month ago, I used his services to look for credit cards that will fit my lifestyle. So, pretty cool. And he also just secured a few million in US dollars in a Series A funding. Ladies and gents, please give a huge round of applause to Yuen.
Good morning. Thank you very much for the kind introduction. So, just to give you guys a very brief intro into who Jirnexu are, right? Jirnexu was founded back in 2012, right? And we provide anytime, anywhere digital customer acquisition solutions for financial services companies. Right now, we operate the largest online financial comparison site in Malaysia, ringgitplus.com, and we also have creditgogo.com in Indonesia. On the technology side of the business, we have Express Apply, which was the first proprietary end-to-end digital customer acquisition solutions for financial services products here in Malaysia. Okay, so there's three things which I want to talk about today, right? When I was told about the conference and given the opportunity to speak, I said, why don't you tell a little bit more about the story, right? So the first thing I want to share with you is, why I started ringgitplus.com when I did. From there, I'm going to go on to the kind of startup 101, right? What was the problem I was trying to solve? But perhaps more interesting for you guys is, what were the problems we faced as a business, and what were the real problems we saw that banks and insurance companies were facing every day in their business, right? And if I have time at the end, I'll share a little bit about what I think is coming next in fintech. So starting with why. For those of you who haven't come across this before, this guy is called Simon Sinek. He's got a great TED talk about the power of why. I recommend it if none of you guys have seen it. So starting with, why did I start Ringgit Plus? Back in 2012, and I'll tell you one thing, I never aimed to start, my goal was never to start a fintech company, right? What you see here is a Google Trends chart for the popularity of the search term fintech. And back in 2010, 11, 12, really no one was searching for it, right? Interest in fintech only took off, I think, in mid to late 2015, right? So way back when, I didn't really know what fintech was, right? My goal with Ringgit Plus was to help to start with Malaysians and eventually consumers all over Southeast Asia, was to help consumers get more from their personal finances. Now, to give you a bit of history, right, I came back to Malaysia in 2010, and I'd lived abroad for almost 15 years, right, from 1995 to 2010. And when I came back, the only personal finance product I had in Malaysia was my Maybank EP account, right? That's the only thing. I still had my childhood current account because I'd never had to do banking in Malaysia when I was away. So I basically had to start my personal financial life all over again. And to give you some context, right, prior to 2010, I'd been in the UK working in finance for about 6 years. So when I was in the UK, anything I needed to do for personal finances, whether it was insurance, whether it was banking, say a savings account or a credit card, I just went to moneysupermarket.com. Right? I never, ever had to deal with a bank branch. Right? I think I could count the number of times I had to walk into a bank in the 6 years I was in London. To me, going online and going to sites like moneysupermarket.com, that was personal finances for me. But when I tried to do the same thing back in 2010, when I got back to Malaysia, it just wasn't possible, right? For most banks and insurance companies, I could not find accurate product information online, and if I couldn't actually apply for the product, right? So when I needed to get, say, a credit card, what I had to do is I had to go to a mall on the weekend, and I had to find the credit card salespeople hanging around in one of their booths, and I had to use them to apply for the product. And what's shocking is, that was 6 years ago, right? So fast forward 6 years to today, and this is still how banks are distributing financial products, right? This is a real booth. It's just downstairs from my office. I blanked out the bank's brand, but you can barely tell that it's actually a bank store, right? They're not, the salespeople aren't using the brand. I wouldn't say they're representing the bank particularly well, but they are distributing financial products for this particular bank. And when I went through this process, it kind of set off a couple of alarm bells for me, right? For one thing, the question was, how much are banks paying to distribute financial products, right? How much are they paying for the rent? How much are they paying for salesperson incentives? And for the consumer, right, which I think is the bigger issue here, for the consumer, it was clear that consumers are being sold financial products. I'd come from a market where I was lucky enough to be able to choose. I could research and find the best financial product to suit my needs. right? But back here, I was being sold financial products, and it wasn't just me, right? It was the whole market. Consumers didn't have the best financial product to suit their needs. They had whichever product the closest bank branch or the strongest salesperson could sell to them, right? So I thought, well, here's an interesting opportunity, right? Because on the one hand, you've got banks which I thought are spending too much money on a very people and paper-based sales process, and on the other hand, you have consumers who did not have the best product to suit their needs. Going from recognizing that there was a problem with what banks were doing, and a problem with how consumers were being treated, I guess when starting Ringgit Plus, then the question is, what is the real problem in the market that I need to solve as a business, right? Now, was financial comparison the problem? So this was actually a mock-up for a pitch deck which I used about 4 years ago, right? And I can tell you that I learned the hard way that financial comparison doesn't solve any problems, right? This is one of my favorite pieces of history from the business. It's a real campaign report. I think the first campaign report I ever received after I started Ringgit Plus. You can see how small we were back then, 4 years ago. We delivered 50 leads to this bank over 2 months. And you can see in the bottom right-hand corner that the bank told us no customers were approved, right? And I remember coming out of that meeting feeling completely sick, because I thought, well, I've invested a bunch of time and some money into this business, and it just doesn't work, right? But I was told shortly afterwards by some friends of ours that they'd actually applied for this card and they'd got the product. So clearly something was wrong, right? The reporting which the bank had given us was wrong. Now, then the question is, well, what was the problem, right? Why is it that we were delivering leads for financial products to banks, and we weren't being told that customers were getting them? And one of the first big lessons which I learned building Ringgit Plus was that you cannot take offline processes, right, from a traditional business and try and apply them online, right? And I'll give you some real life examples, right? So if you're a head of product or a head of marketing at a bank or insurance company, right, what have you always done when you needed to distribute financial products? Well, you get your marketing agencies, right, to build awareness for your product. They advertise through the biggest media channels. Then you make sure that your sales teams are briefed and ready. So they could be agents, it could be branch, it could be telesales, right? And then you make sure that to close the customer, you just have to drive them through the sales process, right? You've got to make sure you have an opportunity to sell, make them fill out the forms, sign off, and pay for an insurance product, or give you the supporting documents for a credit product. Now, when product heads and marketing heads try and take this offline push sales and marketing process online, the whole thing breaks down, right? And it breaks down for several reasons. For one thing, when you get your marketing agencies to try and push your financial product online, it doesn't work, right? The internet is not about sales. The internet is about enabling customers. The internet is about education. So historically, when you've built financial products to sell to consumers, you can't sell it to them online. Another huge problem is that you can't convert customers online without the right processes and without the right technology to do so. What we've seen happen over and over again all over Southeast Asia is that consumers are being driven to websites set up by digital agencies, and those leads which they drop are being given to traditional telesales teams, right? The whole thing is being handled manually. It's being handled with Excel sheets, right? And the end result is that consumer details are being lost, customers are not being followed up on. If they are followed up on, they're being emailed PDF forms which they have to figure out and fill up on their own, right? So not only is there a terrible user experience for the consumer, but there's no single platform, right, to make sure that customers are actually being actioned. And this is a problem that's been around since I started 4 years ago, and it's still around today, right? I think really not that much has changed. And the question for me has always been, why are banks and insurance companies not moving faster, right, to get themselves ready for what's happening, right? And it's not like they don't know what's going to happen. It's already been mentioned several times today that banks in Malaysia have started to rationalize their branch networks, right? This data here is from the UK. You can see that over the last 20 years, the number of bank branches in the UK has halved. So banks know, right, that they can't rely on branches forever, right? Footfall is dropping, profitability is dropping. And to be frank, you don't really need research to tell you that consumers don't want to use branches, right? Who wants to go into a bank branch to get a financial product? I opened up a current account recently at one of the large banks here, and it took me 2 hours, right, to sit in the bank branch for 2 hours just to open up an account, and I was an existing customer for another product of theirs. Why is it that banks aren't doing more, right? Banks know that there's a problem. Banks know that consumers are online. Banks know that the future of their branches is negative. So why aren't they doing more? And one of the real issues, which is I think Slav from Livestream mentioned, is that it's a huge challenge for banks to actually implement new technologies. It's a huge challenge for banks to action technology, right? And I see this every day, right? Because we have technology solutions for banks. The most important thing for banks and insurance companies on the technology side is always what's mandated by law or what's mandated by regulators, right? Next, after that, is what's end of life, right? What do you have to replace before it completely dies as a system? And in more cases than not, technology systems that can improve your business, right, such as customer onboarding, just doesn't get the light of day, right? And again, there's so many great stories we have from just personal experience in Malaysia, right? So, for example, when I opened that current account at the bank, I was an existing customer for another product. But when I tried to open up, I thought I could just log on online to my existing online bank account and see both financial products, but I couldn't, right? Because for whatever reason, whatever challenges they had in the back-end system, I had to open up two separate online bank accounts. I still have to do that for this one bank. So when banks have such basic challenges, right, with their core systems, you can't really expect them to be easily and readily to be investing into online technology. And I think the one person who sums up the challenge best, right, the challenge which banks, or in fact any major company, but banks and insurance companies as well today, face is Clayton Christensen, right? His book called The Innovator's Dilemma. Again, if you guys haven't come across it, it's a bit of an old book on innovation. But what he says is that what makes successful companies successful are processes to make sure that you get ROI on your investment, are processes to make sure that you make money from what you do. But when you want to invest into the future, right? When you want to invest into the future of customer acquisition and making sure that your bank or insurance company is ready for where customers are going to be in the next 5-10 years, you're not going to get the payoff in the next month, in the next quarter, or probably not in this year. Right? And again, I see this on an almost daily basis with our clients. Our clients don't have budget to invest into a system today that's going to prepare them for the next 5 years. Right? They're still trying to figure out their budgets to solve the problems they're facing from the last 5 years. So that's why kind of putting this all together for us at Jirnexu, what could we do? Right? Going back to my vision of in helping Malaysians get more for their money. We realized that online financial comparison itself didn't work, right? It didn't matter if I listed all the financial products online to help you make a great decision if you could not actually get the product, right? So I had to almost take a step back on the vision and goal and to say, well, it's not about financial comparison. It's about actually enabling consumers to get the products they want, right? And it wasn't just about enabling consumers to get the product they want. It was enabling them to get the product they want anytime, anywhere. We live in a mobile-first world, right, where consumers are completely spoiled. For me, I can barely remember what it's like to have trouble with parking because when I have to go to a meeting, I just jump into a Grab or an Uber. Right? It's so wonderful that I can just open up my smartphone and book a car, right? And I can get to wherever I need to go. Right? So this is the world we live in. So how can I enable consumers to have that same kind of convenience, right? This one-touch convenience anytime, anywhere for their personal finance products, so that you're no longer sold your finance products, right? So that you can choose the product that's best for you. And what does this mean for the banks? Well, if I could provide a technology platform for the banks or insurance companies, that means I can save you money, right? That means I can reduce the HR problems you have when you sell financial products. And you can take all that money into building better products, right? You can take that money and invest it into educating your consumers. So that's why we built a platform called Express Supply, right? So Express Supply was the first digital end-to-end customer acquisition platform in Malaysia, right, for financial services products. It's available 24/7. It's fully digital, which means it uses about 80% less human resource than traditional sales techniques. And it's far more compliant, right? It's far better for the consumer, it's far better for the bank. You don't have to worry about pushy salespeople misbehaving to hit their targets, right? Because we're not a sales channel, we're just a technology platform. And what we've seen from running this platform over the last almost 2 years is that speed and convenience matters to consumers in financial products, right? If you tell consumers that it's going to be faster and easier to apply online, they're more than twice as likely to actually apply for that product than if it was a traditional application process. So that's Jirnexu, and that's what we've done so far. But I thought, do I still have time? Actually, I don't have a timer. I can carry on without the slides. I think I know what I'm meant to say next. So what's next in fintech, right? And I recently wrote an article for I think it's called Asian Link, one of the Bank Negara publications, about what I see as the fintech iceberg, right? I believe that what you see today, in P2P crowdfunding, what you see today in robo-advisory, and so on, and payments. And blockchain is just the beginning of the fintech iceberg, right? What we're going to see over the next 5, 10, 15 years for things like artificial intelligence, from things like Internet of Things. Oh, my slides. Back. Great. Things like API banking, which already exist in some places in Europe, autonomous vehicles, universal KYC. This is going to completely change this is going to completely change the entire value chain for financial products, right? If you think about it, what happens when you have artificial intelligence to crunch the enormous amount of data you now have on the way consumers behave, right? You no longer have to evaluate their risk for credit or their risk for insurance based on the questions you ask, right? You can evaluate credit risk. In fact, credit risk is already being evaluated based on how mobile phones are being used, right, in Africa. When you have the Internet of Things, I'm going to know how you behave, right? I don't just have to evaluate your cost for your health insurance based on the questions you answer. I'm actually going to know and be able to price your insurance risk based on what you're doing on a day-to-day basis. And if you think about how does this affect the value chain, well, you're already seeing the funding for financial products being turned upside down with peer-to-peer, right? You're seeing what I believe you'll see next, right? Once distribution changes, right? If you think about the challenges which you have as a bank or insurance company today, you have to manufacture insurance or banking products which your salespeople can sell, right? And you have to make sure that they're simple enough for them to be able to communicate. You have to make sure that the margins are there to enable them to earn their sales commissions. But once you take all that away and you replace it with digital distribution, you are no longer restricted on how many financial products you can distribute and how frequently you can change them. Right? Let's give you one example. I think today, if you want to create a financial product for the market, how long does it take you? Right? Probably 6 to 12 months from ideation to creating the product, to getting it approved by regulators, to training up your sales teams, and to get it launched on the market. Right? So let's just say it takes you 9 months to get the product onto market. It's going to take you another 3 to 6 months to see real data as to whether this product is performing, right? As to whether consumers want the product. But that data is very superficial. You don't know what it is about the product consumers are reacting to and what they don't like, right? But when you replace that front-end distribution model with a digital channel, right, you'll know within a couple weeks, not just whether the product is performing or not, but you're going to know which audiences, right? It could be male, female, by race or by age. You're going to know exactly which audiences react to which product features, right? And when you get that data back, if you don't have to worry about your sales channel, you can change your product within a matter of weeks, right? And if you've got the technology backend to handle that, you can launch multiple products that become more and more customized to your audience, right? You no longer have to have single broad-based products for your entire market. And when it comes to actionable data, right, without disclosing which banks these are, you can really see that, Bank A is able to acquire customers at a fraction of the cost of Bank B, and a much, much higher percentage of the customers who see the ads react to them and finish the process, right? And without going into the details, I can tell you that's because Bank A's products are more attractive. Bank A's products are better, and Bank A has a better process for the customer to apply. And Bank A knows this, right? They have the processes in place. They know that they're more efficient, but Bank B doesn't, right? They're more traditional. And the ROI, the difference in ROI on the marketing expense between these two banks is enormous, right? And these efficiency gains can already be had today. So there's one thing I'll finish up with. It's the question of when it comes to the future of fintech, right? What is real innovation, right? And what is just history repeating itself? And I spent a couple of years on the investor side covering financial services specifically, and also looking very closely at subprime mortgages and the last financial crisis. And if you look at the very core, right, what was one of the problems with what happened with subprime lending is that subprime lenders very often did not take any credit risk, right? They were just distribution platforms. They would originate loans from high-risk U.S. home borrowers, right? Package them into securitized assets, usually credit CDOs, and sell them on to debt investors. So what happened was that subprime lenders would make more money the more loans they originated, and they did not have to take the risk. And what worries me today is you can see that in P2P, right? While it's definitely an innovative model, right? It's definitely very interesting, and And I watched the number of banks shrink on an almost daily basis through the crisis, right? A lot of that was due to lax regulation. But that was in the West. Actually, if you look at Southeast Asia, we've got some of the strongest banks in the world, right? Some of the most stable banks in the world. So, I believe that as a consumer, when I give a bank my money, I want to make sure they look after my money, right? And they look after my money because they're highly regulated, right? Because they follow very strict rules. And if I'm to give my money to a fintech company to look after, then I want to make sure they follow the strictest rules as well. So in a way, I think regulators across Southeast Asia are actually doing as much as they can, right, to encourage innovation and to make sure that at the end of the day, consumers on the one hand can have better products and get more for their money, but on the other hand, that the financial system is also protected.
Anyone with one more question? Besides wanting to know who Bank A and Bank B is? Besides that, you can ask anything else. One more. Yes?
Trying